everyone, John Henry here, slingshotfutures.com. Welcome to the Daily Futures Market Outlook, where we take a look at our favorite markets and formulate an attack plan for tomorrow's trading. Tomorrow being the first of the month, going into August now, as crazy as that seems. This year is just ripping on by. But overall, we kind of ended the month on a little bit of a slow note. Now, the afternoon session obviously picked up quite a bit on crude oil in the euro, but markets like gold and the S&P were abysmal, I think, is being nice. So we definitely see a market that we need patience on, unless, of course, you're trading crude or the euro. Before we jump on in, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to sign you up for the email list so that you can know every single time one of these videos comes out. Along with that, inside of the email, we talk about different stocks and cryptocurrencies and pretty much anything that's moving of interest for anybody who's subscribed to take a look at and kind of throw some ideas around that we may find some tradable opportunities. Of course, if you haven't done so already, make sure to sign up for the live Trader Room subscription and trial info. Inside here, you can get in on a one-day trial and sit down with us in the room, see what we're all about, trade along with us, just kind of hang out with us for a morning. That allows you to kind of meet the members and see what we're all about. You can see my screens in the live trade room. You can see everything we're doing in trading. Just a great way to get a feel for how everything works. Of course, if you do enjoy it, you can sign up for a weekly or monthly subscription, and if you join as a full-fledged VIP member, you get, of course, that live trade room as part of the package. Now, looking at the euro, for the most part, most of the day didn't do a whole lot, right? We were stuck in this kind of stagnation. We really didn't get anything done until around 11 o'clock, and once 11 o'clock hit, this thing just went to the roof. All the way up, massive amount of bullishness in the market coming in, and lots of breakaway type moves. We had this initial just big spike higher that kind of kicked the move off. Buyers realized, wait a minute, something's changing gears here, and they buy into the pullback, slam the market up again. All of the late traders come into the trend, and now we can barely start making those highs. We're running into a situation where we're running out of steam. Buyers need to put up a lot more effort to keep this going, otherwise we're anticipating a larger pullback. Now, we do have a huge upside objective sitting at 18,925. That is the finalized objective for the buyers to get going and finish off. But if we can't make it up there in, well, really soon, especially now that we're seeing all of this weakness on the highs, we may need to get that pullback that we're talking about so the buyers can become interested once again. That pullback area is between 18,390 down to 18,280, and that is the anticipated location where we're going to see the buyers come back in and shove the market right back up towards those highs. So we're still looking for the objective to be completed at 18,920, 25 in that area. But if they can't do it right now or really soon, then we're going to be looking for a deep pullback to get in at a much better price to force the market back up and finish the job off. Over on gold, very slow, choppy day, not really anything going on. It looks like the range high and the range low for the most part. You could split this up a couple different ways. I was kind of debating on which range that I like the most, and this was the original range that just kind of stands out most obviously, with the highs at 75 down to the lows at 72.9. That said, if we take this range, the zone that we have here, and we look to transpose this to the upside to find a deviation, we can see that that deviation lines up pretty closely to yesterday's high and some of the rattling around that we had earlier. But there's also the consideration that the high was put in back here, and they defended it very aggressively every time it came up into that zone. So 76.6 could easily be a larger range high that's looking to sort of complete. So we do have this shallower range that we're dealing with, but the larger range is definitely looming. We do have that slight upward bull channel as well, but not as much emphasis on that. That's mostly just to give us some structure to work with if the market starts breaking out of this. But for right now, we're in a range. In a range, we need to look to buy low, sell high, stay the heck out of the middle. We're near the highs, but we're not quite there yet. So I'd like to see a little bit more juice to the upside here on gold, and then look for fading opportunities to basically just short the market right back down. Now, we tend to like to go with the overall trend, and given the bigger picture here, shorting obviously isn't something that I would really love to do. I would much rather look to buy off the lows, especially if we can get a push back down towards that 72.9 or lower. I would love to find some buying opportunities off of that bottom, but we may not come back. So because of that overall upward momentum, I don't necessarily want to sell right at 76.6, right? I don't want to sell the previous high of day. Using a slight offset, assuming that they're going to be able to break out. We broke out above these highs, right? We're probably going to break out above these highs, but a little bit shallower. You can see them rounding out. So a slight maybe bump above these highs, the most recent highs from yesterday, may be the area that we're kind of looking for in terms of fading just a slight bit above that. Overall, though, we are in a range just waiting for the market to push into an area of interest here on gold. Over on crude oil, another big breakaway market, and again, another market that before, earlier on in the morning session, wasn't really doing anything. We had a very strong range from 6 o'clock all the way until about 6 o'clock, a 12-hour range. We started breaking down, getting a little bit of a bear trend, and even this, you can see, is really, really choppy. And then about 1:30, we had a little bit of a shift in sentiment, huge rocket ship to the upside, and that opens up some massive targets to the upside, back above 50, where we already are, but a little bit further, right? Looking for that 51 mark. Now, 50.85 is the overall objective to the upside, but we are quite a ways away from that. And chances are, we're going to need some pretty deep pullbacks to get that kind of momentum to the upside. So I'm looking for at least 50.09 to start looking at the buy side to push the market back up towards the highs. And chances are, since we have this big spike up into a little bit of a kind of an expanding channel, if you will, looking for this to be a little bit grindy on the way up until we can get towards that objective at 50.85. So tomorrow, and including tonight, kind of in the overnight session, we may have a little bit of a bull, kind of choppy market on the way up, grinding higher and looking to buy low, I think is going to be the best approach for this kind of market. So 50.09 is where I'm currently looking, and if we can get that to kind of kick off into that choppy bull channel to the upside, looking to buy the pullbacks on the way up to finish that objective at 50.85. And then there's the S&P, or I guess there isn't the S&P. Not really a whole lot happened today. Multi-tiered range here as well. Highs 74.25, 74.75 rather. The mid of the range seems to be pretty solid at 71, and then the lows at 66.5. And you'll notice something about that, right? This range, from the very high to the very low, even excluding the range in the middle, we didn't even break out of a 10-point distance. This is a very shallow market that just isn't doing anything right now on the S&P. It's very slow, very grindy. We have to be careful when we're trading this kind of environment. Now, a lot of that could be due to the end of the month. A lot of that could be starting off with a new month. But this, for the S&P, isn't really that big of a month. Usually, they don't care until we start hitting, the quarter marks, first quarter, second quarter, etc., because that's when it rolls over. So I think it's mostly a combination of the fact that we're in summer, right? It's pretty good weather outside most places, and if it's not, it will be, the next day or shortly. We have not a lot of people that want to hang out in the office and trade when it's such a beautiful day outside, and on top of that, we're going into the end of a month. A lot of traders may just kind of be early in, early out, and they don't want to hang around. So we do have a range, as always, like we've said before: buy low, sell high, stay out of the middle, and we like to know what the overall grand scheme of things is. The problem is, well, over the past, I would say about 2 weeks, going on 3 weeks, we haven't gone anywhere. Now, if we go back a little bit further, we can see that this is a beautiful uptrend and we're just pausing. So given that uptrend that was in play early in the month or last month, I would rather be a buyer on the lows. But for the most part, we're not really getting much of a trend sentiment at all. I mean, even in the bigger picture, we're dealing with a slight upward channel that sort of started breaking down, and now we're looking at more like a wedge. There's just not much going on right now for the S&P. So we need to play it safe, buy low, sell high, stay out of the middle. Right now, we're pretty much smack in the middle. I would rather be on the buy side, but we're going to have to sit on hands and wait for that to happen. We're close. They've made that dive attempt lower to that 66.5. I would like to see some buying pressure underneath that to push the market back up again. So overall, pretty quiet on the S&P and gold, whereas the counterparties, the euro and crude oil, seem to be they're taking off with all of the volatility, it seems. So that's going to do it for the outlook. Now, in terms of tomorrow's news, we do have plenty to work with. Tomorrow, bright and early in the morning out of Australia at 00:30, that is basically 12:30 in the morning Eastern time, we have the RBA interest rate decision and the RBA rate statements, and those are coming in out of Australia. Out of the Euro side of things, in Germany, at 3:55 tomorrow morning, we have the German manufacturing PMI and the German unemployment change. At 4:30 out of the UK, we have the manufacturing PMI. And then tomorrow, the only US news announcement is the ISM manufacturing PMI for July, and that's happening at 10 o'clock. So pretty big gap between the big news announcements. 4:30 is the last one bright and early in the morning for the UK, and then nothing else really big until 10 o'clock. That may leave a lot to be desired tomorrow as well, but seems like the afternoon sessions are the ones that are moving the morning sessions. Well, if you're a morning session trader like myself, you might want to grab some extra cups of caffeine for tomorrow because it might be a little bit of a slow one. Overall, that's going to do it for today, though. Like we always say, even though tomorrow is expected to be a little bit maybe lackluster, hopefully the Euro and crude keep doing what they're doing because that might wake things up a little bit. But, well, as always, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.